Hello, and welcome to our market update for June. My name is Jason, and I am the founder of Turn the Key Real Estate. I'm going to talk today broadly as far as kind of what's going on across the nation as it relates to interest rates, the market, inventory, all of those factors. And of course, if you want something a little bit more specific to your needs, please drop a comment below, and I'd be more than happy to reach out and get a little bit more specific, or a lot more specific as the case would probably be. So let's start first with, of course, what everybody's talking about, what you see all over the news, and that's mortgage rates. Now, as I am recording this on June 15th, we did get a little bit of relief today. Yeah, rates are still up, as they're talking about, but what are they up from? Well, they're up from historical lows, meaning never in the history of ever were they that low as what we just came out of in 2020 to 2022, and I'll refer to those later as the unicorn years, coined by KCM, Keeping Current Matters. So if we look at the rates as they are today, and I'm not going to talk a lot about them because I'm a real estate agent, I am not a mortgage lender, and I believe that we should stay in our own lanes. That being said, it is a hot topic, so I'll give you a generalized picture here. Yeah, they're around 6%, maybe 6.5% or so. Worst case, 7%. But that being said, the last time they were that high was 2004-ish. And then before that, though, they'd never been that low. So since 2004, we'd been on a consistent decline. So of course, now that we went back, to a 20-year high, it's going to seem like they're so high. It's not. It's just our new normal, as we heard that phrase so often over the pandemic. And there are some speculations that the rates will come down over the next few months. But with that, just imagine if you're waiting for rates to go down, so are a lot of other people. I recently heard a stat somewhere around 3.1 million people waiting for rates to go down. Don't quote me on that because I don't know exactly what that number was. But the fact of the matter is, it is a common conversation that we have of people waiting for the rates to go down. So if everybody came down, or if the rates came down and everybody jumped back in the market, we'd deal with that zoo that we dealt with back in 2021. And that's a whole nother talk show, but definitely not a buyer-friendly market, that is for sure. So June, it's National Homeowners Month, so let's talk about that. Here's some reasons to own a home in your area. You're gonna build equity. You can't do that if you're not a homeowner. You're building wealth. Again, you're more likely to have a higher net worth if you're a homeowner than if you're renting. You can look up those stats. You have a control over your expenses, meaning you have a fixed rate over the next 30 years, provided you don't refi or anything like that. Or if you do refi, you're still gonna have that fixed rate versus potentially your monthly house payment going up every single year. You have a long-term savings again, because you're gonna be locked in at that one payment. So you're gonna protect yourself against inflation. And it helps with your credit score. You're gonna have a longer track record of on-time payments, and therefore that's gonna help your credit. There's tax benefits to owning. You have mortgage interest deduction. You have property tax deductions. You have imputed rent, meaning you can rent your house. And that's a benefit to you as well. And profit from home sales. So down the road, if you do want to sell your home, you're gonna be able to get that profit. If your landlord sells your home, or the home that you live in, not so much the case. Home ownership remains the #1 feature of the American dream. That means more people have a dream of owning a home than they do of retiring. They're willing to not retire, or at least it's not as much of a dream than if you have a job like myself. I can understand why. It's a passion. But 74% have a dream of owning a home. And then it's 62% is being able to retire, 61% just having a successful career, and 33% have a dream of a college degree. I would be willing to bet that will be on a steady decline over the next 5 to 10 years, but that's just me. That's my opinion. mined Consumer Insights reports. 78% of Americans associate homeownership with the American dream. 65% see homeownership as a means of building wealth or building an intergenerational wealth. 68% of millennials and Gen Z say investing in real estate is a smart financial decision. And 43% of millennials and Gen Z are considering buying an investment property. So America's opinion of best long-term investments. So I'm going to go from worst to best. 7% say bonds, 13% say savings accounts, 18% stocks and mutual funds, 26% say gold, and 34% are saying real estate is still the best long-term investment. And that's according to Gallup poll. Case Schiller says prices are stabilizing. So let's talk about that. So often we also hear, and I was just in a meeting today, we are hearing about, potential buyers that are saying, I'm going to wait for the house prices to go down. Well, over the past 15 years, yes, there's tiny slight corrections, maybe in a month over month aspect, but over 15 years, they've been doing nothing but going up. There was a few months over a 15-year period where they might have slightly gone down, but if you're going to be in your home for the next 5 years, even if it took a dip down year over year, it's going to come back up in 5 years. So if you're ready to buy, it is now a good time. And we can see here, January of 2022, we had a 1.6 increase in month over month, 1.9 in February of 22. And now, after the rates corrected as they did in July of last year and everybody went into a freeze, yes, there were some price drops there, but we also came out of 18% year over year. So it had to be corrected at some point, but now we can see February to March, we are at 0.2% and then March 0.5% increase. So what are those unicorn years? Again, this is coined by Keeping Current Matters, also known as KCM. It is their term for the housing market during the pandemic years. So home appreciation pre-unicorn years, 2017 was 7%, 2018, 5%, 2019, 4%. And then again, these are national. 2020, we had an increase of 11% year over year. 2021, 18%. So now everybody's thinking, oh, the housing prices are going down. No, they actually went up 5% in 2022. It wasn't 18%, but still 5%, which is greater than it was in 2019 and consistent with 2018. There's no listings anywhere. Again, yes, most people are selling because most likely they got a 3% interest rate back in 2020 and 2021. So are pending home sales down? Yeah. In 2021, there's 655,000 homes that went pending. Everybody was trying to take advantage of that market. 562,000-ish in 2022. And there took a dip to 460,276. This is according to Realtor.com, but that is still almost the exact number from 2020, 461,461. So we're back to a normal amount of pending homes. Median days on market, everything's just sitting on the market now. Well, not the case, and it's definitely price point sensitive. During the unicorn years in 2021, it was 35 days. In 2022, it was 30 days. That's different than 2020 when it was 68 days. Now, there's also the nuance there. Obviously, nothing was moving the first half of 2020, so it's gonna be longer because we couldn't leave our houses. And now we're at 43 days is your average day on market across the United States, but that's still down from 2019 when it was 52. So things are still moving faster in 2023 than they were in 2019. Homes for sale. Yes, there's more homes on the market, which is going to lead to longer days on the market. But 2019, there was 1.1 million and some change. 2023, 582,000. So you talk about a market shortage, that's what we're talking about. Now, here's another headline catcher, if you will. Foreclosures are up. In fact, foreclosures have doubled from 2021 to 2022. But read the whole sentence. And the whole sentence says, in 2019, foreclosures were at 493,066. Yes, they went drastically down in 2020 to 214,000, and in 2021 to 151,000 because there's a moratorium. There weren't going to be, banks could not even foreclose on somebody. You had just the ability to stay in your house and not have to make the payments. So it was impossible to foreclose during those years. So of course, now that things have changed, and just life happens where people, maybe somebody dies or somebody loses their job, whatever it is. And so yes, they've doubled to 324,000, but that's still 270,000-ish less than 2019. So don't get caught reading the headlines, folks. It's that simple. So hopefully you've enjoyed this, and I've given you some context to what's really happening out there. And again, if you want to know more about your specific market, be it here in Northern California or really specific to Placer County, your neighborhood, Sacramento County, whatever it is, I am absolutely here to help you. Please, if you haven't already, like and subscribe. And if you want to watch more videos like this, go ahead and check that next one out. Thanks. Have a good day. Bye-bye.